The Reno-Sparks real estate market has changed significantly over the last year. But there is some data that has us optimistic, but there's also some data that has us a bit concerned. We're going to share all of it with you here next on the Reno-Sparks real estate market update, this time for December 2022.
Assist to sell way smarter.
Now, before we get started, I need to mention a couple of things. Number one, this is for the Reno-Sparks metro area only. Does not include Minden, Dayton, Carson City, Gardnerville, Fernley, Fallon, etc. And this is for single-family residential properties only. Does not include apartments, land, business opportunities, commercial, etc. This is going to be a 30,000-foot view of our market. However, if you want more specific information on a property you may own in the area, visit our website, fortrenohomes.com. You can go right down here front and center where it says Find Out Now. Click that button, enter your address, and we will send you an automated value report that's going to give you a good range of what your home might sell for. And then we'll also follow it up with some more valuable information on what your home may be worth. Doesn't cost a thing, so make sure you take advantage of that. Let's dive into the numbers. And the first thing we always look at is interest rates, because that has the most profound effect on prices going up or going down. And we're going to share that with you throughout the presentation. I want you to note a few things. Number one, notice the spike in interest rates back in 2018, and our market did slow fairly significantly. That was about the highest level of interest rates in almost 8 years. Now we go back to today, we see the low interest rates right here during the pandemic, and of course we had the spike up to over 7%. Right now we're settled in right at about 6 3/4 to 6.5% for a 30-year fixed mortgage. Let's look at median home prices right here in Reno-Sparks, and this is something that has us a bit optimistic in that, well, let's explain these charts real quick before we move on. This says November 2022. That's because as I film this, it is early December, so we just got the numbers for the end of November. When it says prior period right here, that's going to be the previous month. So in this case, October 2022. And when it says same period prior year, obviously that's for November 2021, just so you know what you're looking at. So we're sitting at $551,000 as a median home price. That's up 2% from last month, which is a very good sign, up 2.7% from the same period last year. Let's look at active listings. So these are homes that are currently on the market for sale. So if you're thinking about buying a home or you're putting your home on the market, this is who you'd be competing with. These are homes that can be purchased today. So right now we're set at 1,024 homes in active inventory. That's down 19% from last month, which isn't at all uncommon. This time of year is traditionally very slow. Obviously going into the holidays and Thanksgiving and Christmas and New Year's and so on. Usually November, December, and early January is pretty slow before things pick up. So this isn't all that unusual. However, notice inventory's up, but we're right in a normal range. Between 1,000 and 1,400 is kind of where it fluctuates. A few peaks a little higher, a few lower, but that's a normal range, so we're right in there. If you look at active by price, no huge surprises here. Roughly 400 to about 750 is where the majority of the inventory is. Let's look at the number of new listings. Now you say, well, how is this different from active inventory? Active inventory are homes that could have come on the market maybe 3 months ago, 6 months ago, whatever. They're just active and they haven't sold through yet. This is just the total number of listings that were taken for the month. We're sitting at 285, which is down 32% from last month and down 26% from last year. So again, not totally uncommon given the time of year and how things slow down. Now let's look at closed sales. Now these are the number of homes that actually sold. So we saw the active, we saw the new listings that come on. This is the number that have sold, that did sell in November of 2022. 342, which is down 9.3% from last month and down 37.1% from the previous year. Sales are taking place in the same price ranges, again, roughly 400 to 750. Let's look at months inventory. We're basically in normal ranges for market conditions, and we're more of a stable market. However, if you do start looking at price range and the number of months of inventory on price range, paints a little bit different picture. Number one, if you're over $1.5 million, you're already at almost 7 months of inventory. $1 million to $1.5 million, you're pushing 5 months. 750 to $1 million, again, you're pushing 5 months. You come down here, you're looking at 3. Now down in the under 600 range, you're still only at about 2.5 months of inventory. This is one of those charts that has us a bit concerned, and that is unsold listings. Now, what this just means is they were on the market for a period of time, whether that be 3 months, 6 months, whatever, and they were either withdrawn, meaning the seller said, okay, we can't sell it for what we want, we're going to pull off the market, or they expired. They tried for 3 months or whatever, and the contract expired, and they went off the market without selling. Now, in this case, we're sitting at 202 unsold properties, which is up from 189 last month, but is up 288% from last year where we only had 52. Now you can see a normal range would be at the low end, maybe 50 to 75, all the way up to 125 to 150 at most. The way to read this chart real quickly is 0 is basically a median income earner could afford the median home price in the area. So basically it's about 35 to 40% of total income max that they can spend on housing, and that's where they could afford it. So as this number goes higher, it's more affordable. As it goes lower, it's less affordable. And you can see back here in 2008, 9, 7, where the market went nuts, affordability is way up. Why? Because interest rates dropped significantly and home prices slowly started going up until they peaked out and you saw them fall. And of course, remember back in 2018, I showed you that chart of the interest rates. You can see here, affordability started to drop in 18 before we saw COVID kick in. And of course, historically low interest rates made homes much more affordable. But now we're 30%, which means that the average income earner would only be able to afford 30% less, or would have to reduce the median price by 30%. So in this case, let's say it's $400,000. You'd have to reduce it $120,000 at 30% to get down to an affordable range where they'd spend 40% of their income on housing. A couple other charts show exactly the same thing. This was updated recently. So this is the affordability threshold, meaning, they can afford 100% of the median home price. Obviously, when it goes up here in green, that means it's more affordable. Less affordable is down here, and you can see one of the lowest readings on record at 64.8%, which means a significant decline in purchasing power for homeowners home buyers, because purchasing power has eroded with higher interest rates. See the same thing here. This chart's a little bit funky and hard to read, but essentially the black line is the affordability change, and this is income change, meaning has income gone up or down. We've seen income go up slightly, but unfortunately we've seen interest rates rise significantly as well, which has put a hit on affordability. So there you have it, all the stats and news. And as I mentioned before, if you do have a home that you're thinking about selling, you owe it to yourself to get all the data and stats and figures you need to make the proper decision. But also consider there are options for you when it comes to selling your home. You don't have to pay 5 and 6% or more to sell your home. There are options like, assist to sell. Sell your home for only 1%. That's right, 1%. And then MLS would be an additional 2.5%. So total of 3.5%. So if you're thinking about selling your home, you should check out Assist to Sell. Sell your home for only 1% plus an MLS fee of 2.5%. It is an incredibly good value. All that money goes directly back into your pocket. And of course, as the market tightens up, you need to save as much money as you can and get very aggressive on pricing. And Assist to Sell allows you to do a little bit more of that. So thanks for tuning in, and we'll see you next time on the Reno-Sparks Real Estate Market Update.
Assist to sell way smarter.